Welcome to Spidell's California Minute. I'm your host, Catherine Zidane, and this week we're covering some of the tax provisions contained in the Build Back Better Act, which still has yet to be voted on. We're covering these provisions along with some tax planning tips in the upcoming December issue of Spidell's Federal Tax Letter. If you don't already have a subscription, you can get details on this monthly publication at caltax.com. President Biden's Build Back Better Act has undergone numerous revisions since it was introduced last spring. This bill has not yet been signed, so some of the provisions may still undergo more changes, but Congress is closing in on the final bill. Here's a summary of some of the key provisions as of the publication date of this podcast. Regarding the provisions affecting individual taxpayers, the bill increases the state and local tax itemized deduction limitation from $10,000 to $80,000, retroactive to the beginning of 2021. It also creates a new 5% tax on non-corporate taxpayers with income in excess of $10 million, or $5 million for married taxpayers filing separately, and $200,000 for estates and trusts, for taxable years beginning after December 31st, 2021. An additional 3% surcharge will also apply when a taxpayer's AGI reaches $25 million, or $12.5 million for married filing separate, and $500,000 for estates and trusts. Other provisions of the bill expand the net investment income tax, decrease the 75% and 100% gain exclusion from qualified small business stock, and extend the American Rescue Plan Act's child tax credit provisions through 2022, including increased credit amounts and advanced payments. For businesses, the BBBA delays the Tax Cuts and Jobs Act provision requiring that research and development costs be amortized until the 2026 taxable year. The bill also contains several energy provisions. Solar credits for businesses and rental properties are restructured to provide a minimum credit of 6% and a maximum credit of 40% of the basis of solar property, and solar credits for individual taxpayers will be restored to 30% starting in 2022. New plug-in vehicle credits are expanded, but also contain new limitations. New plug-in vehicles will be eligible for a refundable credit of up to $12,500, but the credit is eliminated for vans, SUVs, and pickup trucks with an MSRP in excess of $80,000 and $55,000 for all other plug-in vehicles. The plug-in vehicle credit is also phased out if the taxpayer's AGI is over $500,000, or $375,000 for head of household and $250,000 for single or married filing separate taxpayers. And the BBBA creates a refundable used plug-in vehicle credit of up to $4,000. Like with the new plug-in vehicle credit, there are limitations based on the purchase price of the vehicle and the taxpayer's AGI. Again, all of these provisions we just discussed are part of the BBBA, which has not been voted on yet. So far, the only tax provisions that are with the president are the ones contained in the Infrastructure Investment and Jobs Act, which he's expected to sign on Monday. The most impactful tax provision of the infrastructure bill is the early expiration of the employee retention credit. With the exception of recovery startup businesses, wages paid after September 30th, 2021 are not eligible for the credit. Other tax provisions of the infrastructure bill include additional cryptocurrency reporting requirements for brokers, disaster relief in the form of automatic filing extensions for federally declared disasters, and other various provisions dealing with highway-related taxes and excise taxes. Our annual federal and California tax update webinars are starting up on November 22nd and 23rd, and we have dates through December and January to choose from. To get registered, go to caltax.com and click on webinars. That's all for this week. Join us next time for another episode of Spidell's California Minute.